All right, hey everybody. How we doing? I'm going to make sure that everything is good with the audio before I get into it, given some of the past issues that we've had. So I'll just make sure here. Hope everyone's doing well. Let me know if the sound is coming through okay. And then we'll get started. Audio's good, audio's good. All right. Awesome. All right, hey everybody, Rob Maurer here. Today we are talking about Tesla finally being added to the S&P 500 index. So I wanted to go through the announcement and go through some of the Excel stuff that we've looked at in the past, just to kind of give us all, a better understanding of how this inclusion process is going to work, and some of the things that may impact Tesla here about this announcement. So first things first, let's just jump in here to the actual announcement itself. So hopefully you guys can still see that okay. Nope. All right, orientating myself here. Okay, so this was released after market close today. They say, so this is from the S&P Dow Jones indices. They say that Tesla will be added to the S&P 500 effective prior to the open of trading on Monday, December 21st. So that'll be over the weekend to coincide with the December quarterly rebalance. So the S&P does this every quarter where they'll change the weightings of each of the companies in the index based on their market cap. So they say due to the large size of the addition, S&P Dow Jones Indices is seeking feedback through a consultation to the investment community to determine if Tesla should be added all at once on the rebalance effective date or in two separate tranches ending on the rebalance effective date. Tesla will replace an S&P 500 committee to be named in a separate press release closer to the rebalance effective date. So then they give just the summary that they normally do and some of the additional information. So that's kind of the full announcement there. This is a very unusual announcement. If we look at previously included companies, generally there's only a few days of notice, and we're getting here over a month of notice, as the S&P committee says, due to the large size of the addition. So if we flip over here, we can see they had a second announcement included with this release where they're talking about how this, two tranche addition might happen. And if you remember, we had actually speculated on this being a possibility in one of the three videos that I had previously done on S&P 500 inclusion. So if you want a lot more detail on that process, you can go back and watch some of those videos. But they say they're conducting a consultation with members of the investment community. So I assume pretty much anyone can just give feedback on this matter. So we'll have to talk about, if we have a certain preference or anything. So they say here, prior to trading on December 21st, they're going to go ahead and do the quarterly rebalancing, and Tesla will be added then. And they want to know if they should do a full float adjusted market capitalization, which we'll talk a little bit more about what that means in a second, all at once, effective prior to the open of trading, or if they should do it in two tranches with the first tranche added 1 week earlier. So that would be on December 14th, with the second tranche then on the rebalancing date. So a little bit confusing here. But basically what they're looking at is how to add it. They want to add it because this is such a significant addition to the S&P committee. So here they're breaking that down. They're saying it's about a 1% weighting in the S&P 500. If you think about 500 companies in the index, 1% is a significant portion because, the average is going to be 0.2% or whatever the math is on that. I think that's right. And they say that the estimated funding trade is about $51 billion. So we're going to go through in a second the Excel sheet that breaks down how the S&P is getting to this and what that all means. But just to finish out this announcement, they're looking, they have sort of three different options on how it should be added. So all at once in two tranches, with the first tranche being 25% of Tesla's float adjusted market cap added on the 14th, with the second tranche then on the 21st being 75%. Then the next options here, they have 33% and 67%. And then option D is 50-50. And then there's a couple other things here which I don't think are too important. Yeah. Pro forma timing. So yeah, that stuff's probably not too much of a concern for us. So let's hop over to Excel and discuss this weighting again, because this is going to have a pretty significant impact on the shares that Tesla has outstanding. Okay, so this should be something that most of you that have been watching for a while should be pretty familiar with this. So here, just from, let me flip over to Excel. Make sure you guys can see. Okay. Yeah. So the Tesla float share count. So the float share count, the S&P 500 committee, or the S&P 500 index rather, is a float adjusted market cap weighted index. So what that means is it's taking the float share count is the total outstanding share count, excluding shares that would be presumably held for a long period of time. Mostly for Tesla, those would be shares that would be held by Elon Musk that presumably are not actually available for trading on sort of the everyday market. So that can be shares that are generated through stock options, or it can just be shares held by insiders that the committee thinks are unlikely to be traded. So they exclude those, and then they look at the market cap for the remaining shares, which is just the remaining shares that are not sort of locked up by insiders, times the share price. So pretty simple. So you can see this is just Yahoo's estimate of the Tesla float share count. All estimates are going to be different. So there can be some variability in the numbers here based on what you use for your float share count, but after the split now, the Yahoo estimate is about 760 million shares. So then the S&P, we've gone through this divisor stuff before. This is really just to sort of make it so that as new companies with higher market caps or lower market caps are added to the index, this keeps the S&P price basically fairly balanced to what it should be historically, so that you can just look at the price and see how the index has appreciated over time. So it's a little bit confusing, but we don't really need to know a ton about that. What it really gets us to, though, is that the actual float adjusted market cap for the S&P 500 is about $30 trillion. So it's obviously a huge number. Tesla's float adjusted market cap here then at $455 per share, which it is roughly right now after market. I haven't checked for a few minutes, but it's up about 10-11% after market. So at that market cap, and we'll have to see, how this changes over time as we approach that 21st of December. So the float adjusted market cap for Tesla would be just shy of $350 billion. So if we add that to the market cap, if we put that into the 30 trillion, maybe I'm saying that wrong. Is that right? I don't know. I have to think through the math on that. But if we put that Tesla's market cap into the market cap of the S&P, then it ends up being about a 1.15% weight. So that's where if we flip back to let's see, I gotta flip back here. If we flip back to their announcement here, this is where the S&P is getting this adjusted weight. So they're at about 1.01%. I'm a little bit higher. I'm guessing that's just a function of, how the float share counts are counted. And maybe there have just been some updates to the index that I'm not accounting for here in my numbers, since I'm kind of working off the previous numbers that we had used before. But either way, it's pretty close here. So you can kind of see like where that 1% weighting is coming from and why that's such a big deal. So then what we move into is why this gets really important is because there are about $4.6 trillion in index funds that track the S&P 500. That's basically, they're just index funds out there to pretty much, copy the returns of what the S&P 500 is getting. People's 401ks are invested in that, retirement funds, pension funds, things like that. So it's a tremendous amount of assets that are tracking the S&P committee. So at a 1% weighting at $455 per share, that means that about 116 million shares of Tesla will need to be added to the S&P tracking funds. So that means $53 billion, in the announcement they said $51 billion needs to be purchased for all of those tracking funds to be equal weight on Tesla to what the S&P committee is. So that's why this announcement is basically saying, okay, this is a weird situation, kind of unprecedented. Normally, this isn't such a significant part of the committee when it's being added. They're usually, $10 to $20 billion companies where it's going to be 0.1 to 0.2% of the float of the S&P index, where it's not such a big deal. But here they need to purchase $53 billion, and that's 117 million shares of Tesla, and that's 15% of the float share count. So, you may not think that sounds like all that much, because in a given day, Tesla could probably trade 100 million shares, maybe even more than that. So it may not seem like that much, but a lot of that is being done by algorithms where it's not like one buyer coming to one seller and then that's the end of the transaction forever. There's a lot of back and forth happening that's driving that volume up. So 15% of the float is actually really significant. And that's why everyone has kind of been waiting for this announcement, because this is such a huge purchase that needs to happen. And then those shares are just going to be held. Those are taken out of the float, because once Tesla is in the S&P index, it's not going to drop out, obviously, and barring some unforeseen event. So those shares are just going to be locked up and pretty much held forever in these tracking funds. So the other column that I have here, this is benchmarked funds. So managers of this $6.6 trillion are compared to the S&P index, meaning if they underperform the return of the S&P index, they're not going to earn their bonus, or they're not going to be compensated as much, versus if they overperform, they're going to earn a better bonus, things like that. So 6.6 trillion in additional assets beyond this 4.6 trillion are held in those tracking funds. So if all of those funds wanted to be equal weight Tesla, which is another way of saying they don't want their overperformance or their underperformance to be influenced by their position or lack of a position in Tesla, then they would also need to buy $76 billion worth of Tesla shares, or another 167 million shares, about 22% of float. So if you put all that together, we shouldn't do that, but just as an example, if you were to put all that together and everybody was equal weight, that would be about 284 million shares, about $130 billion, 37% of Tesla's float. So for sure, this 15%, that's what the S&P committee is saying needs to be purchased. This 22%, that is sort of this maybe category, but managers are going to have to decide one way or another how they want to position themselves on Tesla, underweight, equal weight, or overweight. And certainly some of them are just going to want to be equal weight. So I'm guessing there's probably going to be some forced buying in that category too. Probably not up to this level, but again, we'll just kind of have to see. So I think that kind of explains just why this is so important. I think this amount of buying, as you can see in the after hours trading today, people are anticipating this. So those shares need to be bought from someone. If no one's selling, that's just going to drive the price up. So who knows where things go from here, but we're just going to have to kind of wait and see. I'm excited about it for that reason, because I don't think it's going to be super easy for this many shares to be purchased. Tesla did make it a little bit easier with their capital raise not that long ago. I can't even remember the share count on that. It was nowhere near 116 million. They only raised 5 billion, so it'd be about a tenth of that. I think it was 10 or 11 million shares. So that increases the float a little bit, but it's such a small percentage of the total outstanding shares that this is going to be a pretty tight situation, I think, for those buyers. Anyway, so the other thing that's really interesting about this, I just want to flip over here to one other Excel sheet that I think you guys will remember. I've got a lot open here. I know it's going to be tough to see this. Let me see if I can zoom in. So this was when we were trying to figure out when Tesla might be added. It was kind of just looking back at, all the announcements the S&P committee had made and sort of when they were made. So the section I want to focus on here is days from announcement to inclusion. And again, maybe I'll zoom in a little bit more here. So you can see for Tesla at the top here, we're announced on November 16th. Date of inclusion is the 21st of December. So that's 35 days versus all these other companies. The maximum here was 10 days, not a single case where there was more than 10 days. So if I scroll up a little bit more, you can see the average from announcement to inclusion was about 6 days, median 7 days, minimum 1 day, maximum 10. So that now maximum goes from 10 to 35. So I think that just, if it's not clear how, significant of an addition and how sort of unprecedented this situation is, I think the 35 days from announcement to inclusion just highlights that fact even a little bit more. So yeah, the other thing that I looked at here, I don't want to spend a ton of time on this, is just sort of the the variance between when the stock was announced and when it was actually included, and then the stock at the last earnings and when it was actually included. So I'm just going to scroll down to the bottom here so you can see there's not like a huge difference. I think the announcement to inclusion is probably more important to look at. And you can see there was an average of no change. The median was also no change across all these different companies that were added. So the week of, December 14th or December 21st, I don't expect it to be all that significant. I think what we're going to see is a lot of people buying up these shares ahead of time in anticipation of the funds needing to purchase those shares later on in December. So I think we're going to see a lot of this impact happen beforehand. A lot of that I think is coming already in after hours today, but we'll see how things progress over the next couple of weeks. It is exciting. As a shareholder, I'm excited. But once we actually get into December, I don't expect it to be, all that significant by that point in time. The other thing that I want to just briefly mention is, I've received a lot of pushback on this from other people, but I do remain pretty confident that fund managers can actually start buying before the inclusion happens. Certainly by the time it's announced, they have the flexibility within their funds to buy things ahead of time or to buy things afterward. So I did a whole episode on that, on, maybe like how a bell curve might look for when these funds might buy. I don't think I have that Excel sheet up right now, but I think that was the third video I did on S&P inclusion if you want to go back and just do a little bit more research on that. But the point there being that not all of this is going to happen on December 14th. Not all of it's going to happen on December 21st. If you want proof of that train of thought, I think Charles Schwab in their S&P tracking fund, there's a little paragraph in there that says that they have that discretion. So the point being here, we're going to see an impact of this right now from the minutes it's announced all the way up until inclusion and possibly after inclusion if some fund managers want to wait. Regardless of when they add it, they risk deviating from the S&P, the benchmark performance, because once on that December 21st date, that's when it's going to actually be added to the index, and that's when it's going to start becoming a factor in terms of the benchmark. And when you look at year to date or 5-year comparisons of the S&P performance versus whatever other fund, that December 21st date is when Tesla will start being included in that. So that kind of goes back to that announcement from the S&P on just how they want to do that addition, because that's going to affect how that benchmark gets established. I think people are going to want the stock to be purchased a little bit beforehand, so it's not all trying to happen within that 1 week, just again because it is so many different such a dramatic amount of shares that need to be purchased. All right, so that was a lot to go through. I think that is most of what I would wanted to say on this. So I'm going to just hop in here and look at if there's any questions from chat, or if I happen to think of anything else while we go through this. So bear with me as I just kind of look around here. All right, so this is a good question. Sun Devil Advocate asks, what about the fact that it wasn't previously included in the S&P 1000 like every other stock that has moved into up to the 500? So I think the 400 there, I'd have to look, but I think the 400 is that mid cap. Usually some shares are owned and then they can just be exchanged basically from those S&P 400 funds into the S&P 500 funds, sort of when that transition happens. So you've got this big chunk of funds that wants to sell, a big chunk of funds that wants to buy. With Tesla, because they weren't profitable up until now, they're a little bit unique in their inclusion in the S&P 500. Certainly not unprecedented, but this is a rarer circumstance for a company to not just be upgraded from sort of a mid-cap index. So what that means is because they don't have that chunk of index funds that are going to be selling, it's really a lot of fresh demand for these shares, which is another reason this is more impactful for Tesla than sort of a normal circumstance. So really great question on that one. All right, just gonna look around here for a few more. While I do that though, I had to laugh because as I was uploading and publishing my video going through the Rivian configurator today, of course this news broke. So it's like Tesla gets announced and I'm dropping like a Rivian video at the exact same time. Not ideal. So if you can pop over and give that video a like, because I think people were a little mad. All right, just looking for some other questions. Oops, meant to keep that up. Thanks, Mark. Mark's been an awesome supporter for a long time now. I'm trying to look at all for questions here, but I have to look at the super chats first because those get highlighted here. Thanks so much for that super chat. That's awesome. To all you, I mean, you're all so supportive. This wouldn't happen without you guys. I need some background music, some elevator music. I almost started singing my intro. That would have been so embarrassing. All right, so let me get back to the bottom of the chat here now. Sorry if I missed any of your guys' questions earlier. All right, so I'm back to the live chat. Let me just see. So I'm not going to really speculate on where I think the stock goes from here. You know, I think it goes up. I think that's clear in after hours. I have been positioning myself with just a few calls here and there because we kind of all knew this would come at some point. It wasn't clear when, but you know, since Q2, Tesla has really become eligible. I was a little bit surprised to see it now. I thought the S&P committee might wait until they posted an annual profit excluding the regulatory credits, which technically in Q3 they did do that for just the single quarter of Q3, not for the trailing 12 months. But if you actually look at the tax rate and how that would have been applied to the regulatory credits, and then you remove the impact of that tax rate and you remove the regulatory credits, Tesla actually would have been profitable sans regulatory credits in Q3. So maybe they did that math, maybe that's why. Or maybe they've just been trying to figure this out since Q2. Christian says, what does super chat mean in a super chat? So I think you figured that out. What does this mean for funds that already hold Tesla? Will they continue to hold? You know, that's going to be up to every individual fund. I think there are probably some funds that specifically don't hold companies that are in the S&P 500, more potentially growth-oriented funds. Maybe they just filter those companies out because at that point, you know, they've sort of already made it, I guess, quote unquote. But obviously you can see significant appreciation in companies happen after the S&P 500 adds them, you know, tons of different companies. And if you look at the rate of return on the S&P historically, it's been good. So I don't think there's going to be a huge contingent of funds that would want to sell now based on this. There will probably be a small little chunk, but probably not anything too significant, especially knowing the fact that Tesla's not getting promoted from the mid-cap fund. Wow. Thanks, Rich. Really appreciate that. That's awesome. Somebody I think asked for an update on my Tesla order. So they texted me and said 3 to 6 weeks last week. So we'll see on that. Here's a good question. Not daft at all, Peter. So where does the 51 billion go? Is this cash to Tesla? No, this is nothing. There's not going to be any purchase of new shares from Tesla unless Tesla decides to do an additional capital raise off of this. The 51 billion is just the total amount of assets that need to be held in terms of actual Tesla stock. So like if you own, you know, 1 share of Tesla, you have $450 invested in Tesla. This is just the same thing. It's just saying these funds need to own, you know, 115 million shares of Tesla, and the value of the shares that they own is going to be around that $50 billion level. So it's just a matter of where the value of those Tesla shares sit. There's nothing new there. That value already exists. People are already holding that. It's just they'll have to sell that. They'll sell their $51 billion of shares to this purchaser of $51 billion of shares. It's just a transaction. There's no benefit to Tesla other than the fact that presumably the shares are going to be locked up by a long-term holder now that sort of the S&P and all the tracking funds are, in theory going to be. That's a really good question though. All right, so here's one from Ron. It says, if the stock splits again down the road, do the indices need to hold those as well? It seems like the small quantity of shares in float might make things more volatile. A little bit confused by the wording of the question. I think what you're getting after is, would there be any impact on, the 115 million shares that need to be held by the S&P and tracking funds if there were another stock split? Essentially the answer, and from the best that I possibly could understand it, is that when there is a stock split, it really doesn't change too much in that. There's some theories out there that maybe it affects people that have naked short positions open, which, we haven't gone into detail on that. But largely, I think for our purposes, we can consider that another split wouldn't really have too much of an impact. And certainly not on the funds. They still need, it's weighted on market cap, and a split doesn't affect the market cap. So it doesn't affect the weighting, which means that there's no effect on the share count that needs to be held by these funds. So really that would be a non-event in terms of the S&P, index funds and the level that they need to hold. All right, I think that's about it. Sorry if I missed any questions. Sorry if I missed any super chats there. I really appreciate you guys, tuning in and sharing your thoughts. And I think this is, it's an exciting day for everyone that's followed Tesla. I'm happy to move on from this topic. This will be the fourth sort of in-depth video that we've done on this. So I'm excited to get it added, and we can move on to really what's more important, which is the fundamentals of Tesla's business. The S&P, this has to do with the ownership structure. It's nothing to do with the fundamental business. So really it's not important. We talk about it a lot because it's interesting. Like I've learned a lot of, going through all this, and hopefully you guys have too, just about how all this works, because that, who owns the stock affects the other owners of the stock too. So it is important, but the fundamentals are much more important. And now that this is behind us, or will be behind us shortly, we can all stop worrying about what the impact is going to be, and move on to, better topics like Q4 results. So it'll be really exciting to have this inclusion. We'll get Q4 results. We'll have, the FSD beta, I think, continues to roll out to more people. I think over the weekend we got a little bit more beta testers involved there. So we should have a lot happening with the FSD beta. We have the S&P inclusion. We have Q4 results, which again, I'm still expecting 200,000 deliveries, 200,000 production roughly. We'll see on deliveries, but production 200,000. So I think, it's going to be a nice little stack here heading into the end of the year, sort of COVID being an exception. So yeah, we'll see. But that'll wrap it up for me for today. Again, go check out that Rivian video if you want to see their configurator. Otherwise, we'll be back tomorrow with another episode. Thanks, everybody.